Hello and welcome. It is the end of the 27th day of March 2019. My name is Derek. All bets, trades of the like with each his own risk and their own reward. There's really only one thing I'm going to be saying that really would apply to such. It's not like it's that big of a play either way. Although risk reward management, that's job number one in my book, and I keep saying that just even for a reminder for myself that well, risk reward management. Job number how much can you make and how much can you risk towards doing so? And you look at how to avoid all the bad aspects of on the risk side, hedging, profit taking, how to maximize any type of gains, thus on the reward side. And I'm just going to finish it off with stating yada yada yada. That's just all the stuff yada yada yada. Okay, daily. And this is Bitcoin. That's the only chart I'm going to focus on. What do we see here? I moved back down this correctionary level in the daily. But today's session, after yesterday's microscopic volatile day, which I can see a high at a little over 39 and a third, and a high almost at 30, or low rather, almost at 38.80. That was a differential of like 57 points. But today's session, up 2.79%, and it could go up a decent amount more with only 14 minutes left in the hour. It's 7:46 p.m. Eastern Time, 11:46 p.m. when UTC time. Okay, and why do I say go up more? Well, let's just move this to a shorter term time frame. Let's say the 4 hour. And it's an interesting situation in here. For this level of support was kind of established. Oftentimes, from a failed move, a fast move in the opposite direction. She's sure looking like that's the case here. Let's take a look at this on the single hour. And this thing has been going good from the break of this resistance near 39 and a quarter. Nice triple quad green move up, but ever since this big one, grinding its way higher for 5 hours, going sideways for close to that same amount of time. And then within a couple of hours in here, having this up move and then this nice little slide down. And well, this period is much different than the last one. It's breaking out from this 18 average and getting above this level of resistance, as we see it on the daily. That's a pretty big situation. Within the 15 minutes, nice little move here as it's had this established resistance near 40.14, 40.15. And it had another test of it on a few hours ago, but not going down, not resisting it. 1, 2, now in the third green candle up with just 9 minutes and 56 seconds left in the 15-minute period, the hour, as well as the day. But let's go on to the more longer term weekly. And we're seeing it in a situation where we've had just this amazing up gain for quite some time. And well, so far it's had this correctionary move, had the big price point, which then set up the descending triangle, which obviously broke to the downside. Thus, this leg lower, and since then it's been really just a sideways consolidation range. And within it, we see, okay, in a down move, what usually happens is you go down for a bit and you got to keep going down. We're going to resist within this. Maybe you come up near the highs. Well, had a red move down after it came close, but no, it paused for a few weeks going through time. And then the first week in February, it hit the 18 lows. It didn't go down then. And now it's like, well, if it's going to go down, what's taking you so long? As we're seeing all of these microscopic volatile weeks grinding its way to the upside up until a couple weeks ago. Because for the last 2-3 weeks, if you can barely see the candles, well, resistance is firm where we're at 40-30, but I mean, well, these weeks are just tiny. This one has a low of 39.19, a high of 40.55. That's 55 plus 80. That's 135. So like 3-4% in a full week. And then you talk about like the month. The month of March. Well, the monthly chart. Well, I'm not going to put that one up. Yes, I will. It does resemble the last few, just a little bit of these sideways moves within it. The 18, or within this setup, the 18 lows comes in at 48.88. The highs comes in at 7,000. I wasn't planning on talking about this. I had it planned to go all the way to the 15 and the daily, weekly, then go back to the daily, which is where I'm going to go now. But views so with more candles. Because when I look at this overall, this general area of resistance has been pretty big. This would be the upper end of it. It hasn't touched it since a day before Christmas last year. And it somewhat came close here. It came relatively close here. But now you got this general area, because this now suffices these moves in here as well. As far as the low is concerned, I'm not going to draw like a perfect line, but it's more of a rising one, thus an ascending triangle. Well, it's got to break it one side or another. If it breaks it to the upside, and I have lines with Fibonacci around 48, wouldn't be surprised if that level as resistance would be more like 5,000. And if that level is not resistance, we're talking about going to 6. And I think that's one of the spots where it might just break through one of them, hit like 2 Fibonacci levels, and just have fast, larger size volatility. A change in the market story would be the case, doing so on the rise above. I think as a trader, selling in these levels here, other than for your very short-term plays, just doesn't make sense. Doing so at least at around 5,000, because to me, if it's going to break this resistance, this is an extremely conservative level, I think, to say that's where it's going to go. If one person says that, oh, it's going to go to 4,900, and another person says it's going to go to 5,900, well, every time the person's right that has a higher number, so is the other person too, because it technically would go there before as well. But as far in a level where I would expect it to go, I think, yeah, it can go here, but don't be surprised if volatility takes a very sharp turn from what we see as not so big to much larger. It was very microscopic in volatility here, and then this stage changed everything. A little bit of pausing in here, and from this point all the way until around, even definitely in here, or definitely around here, very big volatility. That okay size in here, microscope okay-ish here, and then extremely tiny since the decline on February the 24th on the volatility scale. Now if this pattern breaks it to the downside, I got it's 2 layers on the downside. And what do I mean by 2 layers? Well, we got previous low, and we're well above that now, and at 4,000, with the previous low being 3,100 change. For just because this pattern's in a ascending triangle doesn't mean it can't be arranged sideways. Support has been established between, again, the 31 low and the 33 low. So between 3,100 and we'll even say 3,400. That'd be a big area of support, and its market movement could be like, oh, it's just a rangy sideways market. Maybe that's where we'll spend the next 8 months. Maybe not. I don't think so. But as I've been talking before, this support level at 3,000 was the target if something like this were to happen. It pretty much was correct. It was a decent pierce above. It sucks if you were trying to buy, and I was one of them. Thus, it worked out that what I sold back in here, some of it turned into Bitcoin at cheaper prices, some of it turned into gold and silver. But as it is, the market came down to this point. It would be a retest of that previous support. So when I say that, I shouldn't even say the lower end of the range is 31. More like the lower end of the range is even 3,000 and it pierced below. And if it doesn't hold that general area, then just as I mentioned, fast volatility coming up here, well, Same thing if we're talking to the downside, where any of these areas can happen, and just whatever quick kind of move. It could be one day, it could be 4, 5, 6 days in a row, maybe one up day in the middle or one pause day, and it goes down to this kind of level on that situation. But probability odds right now, I haven't listened to what the community of people think, how bearish, bullish people are. I did realize back in these areas in here that it was a lot of people that I expected not to be talking bearish about cryptos, and they were doing so. Suggesting to sell Litecoin under $30 and all that type of jazz, like it's going to come down here. And when I see that in the masses on the way down, and then it almost makes you wonder if we're pretty much, if the bottom is in or near. And when I say the bottom's in, that means it could easily correct down and make a higher matching low. But if I was a betting man, which I am, and I had the availability to bet on this, which I do, would I bet on this to go higher? Where one of the strategies in trading, and the answer to this is no, but one of the strategies is, oh, you see something breaking out. I don't want to buy it until it gets to a certain level. And I don't trade this way, but as you see it in here, you just go in there, you put a stop under a kilo, which to me looks like it's under this one, and you just play your gains to however you want to do it. Now, what I do find interesting about this situation, which is why I'm going to finish this video off within this subject, is you have this exact moment where the market is looking as if it's ready to break out. And from this point, after it does this, comes to the 18 lows and starts to rally like this. Now, leaving it is buying now, placing a stop loss to start somewhere lower around here. So therefore, risk reward. Well, you're buying at 40.22. You'd be putting a stop, we'll say, at 38. That's a differential of about 200 basis points, or about 5%. So in spots like this, I didn't want to do that. I'm trying to just lift off the thing like this. Spots like this, if you know your risk is going to be that, that means if you're going to lose, it's going to be somewhere around 5% of what you bet. And you start profit taking as soon as it gets up here. And your original for early age or start of place gain, oh, you got a gain of 800 points. That's 20%. So right off the bat, you're getting 4-to-1 odds. So if you just sold everything here, you realize if you win this 1 out of 5 situations and lose the other 4, you should be breaking even or in that area. And furthermore, you can look at it, okay, when it gets up here, I'm not going to sell 4, I'm going to sell 2 of them, or I'm going to sell 4, I'm going to sell half of what I got in this point. And then you got the math of what happens with rising stops. But for me, when I go to the strategies that I talk about, the way I look at it is when you have both coins, it can be Bitcoin as your base and Ethereum as well, and you're trading 2 coins. If you just wait to buy, and I don't know why that did that. There we go. If you just wait to buy, I'm like, okay, I'm going to have buy orders ready to go here, sell orders. Essentially what you're doing is, let's assume you started today and you just, if you go in here, it's like, okay, I'm just going to make a trade. I'm going to buy this at 37. I'm going to sell this at 41, and you're going to win. Because at some point that's going to happen. But if it goes down, instead of stopping out, buy more. And then when you look at what happens on almost any chart, and you go back over months and years, you're going to see in time just how well that works. And if you look at your history of your trades, you can see that out of, say, if you just do this with many different crosses, of like 600 completed trades, or overall, you're winning like almost all of them. I mean, there's going to be situations where a market just keeps on going up, and then what's going to happen is all your sell orders get in the dust. And selling is pretty much like shorting the market. Because you own both, you have the power to short the market. In the sense that, well, I'm going to short the market here. At this point, I'm going to sell. Okay, the market goes back down, I'm going to buy it. Your trade is won, it's over. And of course, if you short at 41 and you cover at 37, and then that would work out well. But when you were selling silver or Bitcoin before, at like 150 all the years back, and that's it. Whatever cash you got on it. Whenever you sold Bitcoin back in 2007 for 2,000 or 3,000, that's where you lose because something just goes up or down. But when you do this on many different pairs over a long period of time, when it goes up, that just means you're dollar cost averaging your transaction, or Bitcoin cost averaging, depending on your base currency. And then with the markets that go down, you could end up having buy orders that may never ever sell because there could be a point where the price never goes back to it. And in such, you might need a lot of time and volatility just to get back to even, or to start seeing profits again with some of those coins. But if you just go to so many random crossings of whatever, especially when you're up against Bitcoin, and especially even more so when you take two whatever alts, oh, Ripple and whatever else, XEM, New Economy Movement, those two random coins together, and just buy both of them and trade their ratio back and forth. The first trade, the ratio's either going to go up or down, and then it's like buying one, selling the other. And when you do this over 50, 60, 70 trades, you're going to notice that a lot. You look back at what you bought and what you sold, that the results would be fantastic. So I know I spent a lot of time talking about this, but that's why I prefer trading in that kind of format. Alrighty, video's over. Thank you for tuning in. Bye-bye.